Ladies, gentlemen, in this video, I'm going to explain to you why investing is the most valuable commodity on the planet. And you're probably thinking to yourself, well, investing isn't really a commodity. It's more of a strategy, if anything. And I am going to slap the years you have been taught wrong about money, finance, and investing out of your life in this very video here, folks. And I'm going to explain to you this with a very simple example. If I were to give you $1 million today, where's the first place your mind goes? Well, it goes to all the stuff you can buy. Lambos, houses, boats, jets, that really luxurious lifestyle here, folks. You will always be broke if you choose to pray at the idol of stuff. Now, what is more valuable than everything I've just shown you here? I mean, seriously, what's more valuable than a Lambo? What's more valuable than a multi-million-dollar house? Most people will never be able to answer this question because they've never been taught how to buy time. Time is an asset, guys, that you'll never get back. And when you're finally at the end of your rope, everything that you have given up over your life is finally gone forever. And I know this sounds kind of, dark and crude here, folks, but this is a real reality. And I'm trying to get you to understand the value of your time that you are trading at your 9 to 5, sometimes 6, 7 days a week to pray at the idol of stuff, only to wake up at the end of your life to realize all the shit you bought is completely worthless. So in this video, I'm going to be breaking down all the misconceptions about money, finance, and investing to get you on the right path that I started down 5 years ago that has led me building up a 6-figure portfolio I can work from and do whenever I want from wherever in the world without somebody telling me where to show up on a time schedule. And this is purely to help you out and offer you some clarity. So in my transparency, I simply ask that you slap that like button, folks. But let's Welcome back, passive income investors. I want to kick this off by telling you a little bit of a story because we're all raised kind of this way. To show up to school, you kind of get used to a scheduling of going to school. We get taught that you have to educate yourself so you can eventually go to college or university, get a degree, so you can put your resume out in the world, find yourself a nice job where you're going to get a good salary and you're going to be able to get a nice house, get a little bit of a retirement account built up, save up over your time, keep hustling at your job until eventually you can have a nice, wonderful American dream retirement. And this sounds absolutely wonderful. If you look at the current statistics, more than 50% of Americans are not going to have enough money to retire. And it's because they have not been taught some very fundamental rules here, folks. Now, I got in this unusual place when I was a kid where I actually decided to start my own business. And I was an idiot when I was a kid because I just invested on a whim $20,000 off a line of credit into my business. Thank God I hustled. I worked hard. It took me 3 years to pay that back. But one thing I realized about working for myself is I don't get any benefits that a salary employee gets. I don't get unemployment. I don't get severance if I get fired. And if I hurt myself, well, I have to go get my own personal insurance to protect myself against that. So I realized, heck, I need to start saving money here, folks. And this is when I realized the biggest misconception that everybody has about investing. And that is that they think investing is risky and you're better off stacking cash and saving money. People forget that cash in your hand is an investment and it devalues over time. And actually, it's one of the worst investments I can honestly tell you can make. And let me give you an example. I'm a Canadian, live up in Canada here, folks. And if all I did for the last 10 years of my life, which you may be of a victim to, and hopefully this is going to teach you something and add some transparency to your life. But let's presume I stacked $100,000 in Canadian dollars here. So that's 100,000. And that's the number that will always show up in your bank account. That if I had a bill here, that would always be the same number on the bill. The bill doesn't change here, folks. But what happens is there is a back asset value to currencies. And currently the Canadian dollar over the last decade has actually lost over 25% of its total value. That means that $100,000 you have in the bank is now worth more than 25% less. And the only time you're going to notice this is if you go to buy food, if you decide you want to buy a house one day, heck, even if you buy a vehicle, you'll notice that over time, things just keep going up in value. But it's not necessarily that they're going up in value. It could just be because your currency is getting devalued, and this comes from a cause of inflation. If you don't know what inflation is, I love explaining this as simply as possible. It just means we put a value on currency, and that value is based on how globally that currency gets traded and how much is floating on the market. And in times like this, when we're going through crashes in the market, the government prints off more money than they ever have to help out the lower class. And this causes hyperinflation, because for every new dollar that gets made, it devalues the one before it. And it's really a shame, because the idea of what the government's been doing has been trying to help the poor, but at the same time, when that government money runs out, those lower income class people are now going to be stuck in a hyperinflated market where everything is just going to cost more, and they're kind of left in the same situation they were before the crash even really took place. And we are so manipulated around the idea of cash that most people have been taught to put their money in a high interest savings account. That's the safest thing you can do, right? And I'm going to show you my account right here, folks. This is one that I only currently have about $2,000 in, that is currently making me about 1.15%. Heck, you're lucky if you get 2%, which, to keep in mind, the average inflation rate is 2%. So if you don't want your currency to get devalued, the best thing you can do is put it in a high interest savings account. But does that really make sense? I mean, think about it. When you put your money in a bank, what does the bank do? Well, they take that money and they leverage it out on credit cards at 20%, at line of credits at 3, 4, 5%, into mortgages at 3, 4, 5%. Yet you're told that, making those kind of investments using credit cards, all of that stuff is risky, but the banks are actually doing it with your own money. And if you don't believe me, convince the world to pull all their money out of a bank. The bank will go bankrupt, the economy will completely fall apart. This is kind of like my emergency fund. And I do have a couple of these, all at different interest rates and different accounts. But what I do is, instead of spending my own money, I keep it locked up in high interest savings while I leverage the bank's money off a line of credit into assets. Those assets produce more income than I owe on the line of credit, allowing me to not only pay the line of credit back, but put extra money in my pocket. And on top of that, those assets not only cash flow me capital, they go up in value over time instead of getting devalued with things like Lambos, things like currency. This is going to be one of the most important lessons that I'm ever going to touch base on right here, folks. Now, obviously, I'm not advocating that you go out and use a line of credit into the markets. That is very risky stuff here, folks. But what I'm going to do is I want to talk about the fundamentals of assets versus liabilities. And if you can grasp this concept, it won't matter what you do for the rest of your life. You're going to understand how to take the money you earn. You're going to learn how to convert it into assets that cash flow and go up over time, eventually allowing you freedom because you're buying time. These assets and cash flow work by themselves. They're going to keep producing money for you while you're sleeping. And this sounds like a fantasy, but I'm showing you my portfolio right now of all my passive assets. Currently, the way they are right now, if things continue into the next year, I'll be making about $21,402. That is just cash flow that does not include asset value. My assets already in the first 6 months of this year have gone up about 20 or 30,000, which means I am now making about $50,000 to $60,000 without me investing any more of my time. Now, keep in mind, I do have to update some of the stuff. There is some manual labor involved. But the difference is I can do it anywhere in the world at any time, take breaks, go spend time with my family, and that is what I actually enjoy doing. Now, back to the topic at hand here, folks, because I have investments in the stock market, businesses, websites. I mean, you can get involved in real estate, cash flowing, rental real estate. There's a lot of varying options here, and you're going to have to figure out what ones best fit your circumstances. Keep this again in really simple terms, guys. A liability is simply anything that goes down over time. These things will ruin your life. This is somebody that buys a house to live in, that buys a car, has to have a lifestyle, wants a yacht, wants a jet, wants to go out every weekend for dinner. These are the people that'll have to work until they die. That is not the life I want to live. If you want to live the passive life where you can do what you want when you want, you're going to have to understand the asset side of things, guys. Now, assets fall into a class of things that simply go up in value over time. And we could talk about the stock market, which includes everything from bonds to ETFs to mutual funds. You could be talking just about physical real estate. Heck, you could just be a back-end deal on real estate where you just fund the project. I mean, you could be getting involved with websites, starting your own business here, guys, getting management to run your business. And again, this stuff is not easy. It does take a sustainable amount of time, but to give you a little bit of hope and motivation here, folks, I have never made really more than $40,000 a year off my working income since I started my career over a decade ago. But as I made that money out of fear of losing my job, of hurting myself, of not knowing what the future could hold being self-employed, I took that capital and I learned how to add assets on top of my income. And what that has led to over 5 years is a $170,000 portfolio, making me a pretty healthy income that I could sustain on if for whatever reason I need time for myself or my family. Now, let me talk about how long it can actually take to get to a true place of freedom if you can just get your mind off praying to the idol of stuff here. My honest example, using myself here, folks, I have been able to save over the last 5 years about $80,000. $1,000 or so. That is my own contributed income that I frugally worked really hard for. If we divide that out over a 5 or 6 year term, it equates to about $1,100 a month, or the equivalent of about $13,000 to $15,000 a year. So we'll just plug in a very good baseline of about $14,000 a year. So you have to think, I make about $40,000 a year. After my expenses, my taxes, and my living expenses, I'm still able to bank somewhere but over $1,000 a month, or again, $14,000 annually. And again, this is the general mean. There's years where I put more away, and there's years where I put less away, but this is going to be a good average to give you an example. Now, let's presume I want to be retired by the time I'm 35. I started 5 years ago here, folks. So if we add up the fact that I'm 28, that means my entire investing career to retirement will have been about 12 years, give or take. So again, not adding any of the current principal, because my total current principal is $170,000 in assets. I'm just showing you as if I were starting from scratch to give you a really good example here. Now, the interest rate is very interesting because it's really hard to predict what the future outcome of your investments are going to yield. But the average rate of return that most people use as a benchmark is something called the S&P 500 index. And this is an ETF, as they call it, an exchange traded fund that holds 500 of the largest companies in the US. And it is a very sturdy, stable investment. And the average rate of return has been around 8%. But I'm going to come and touch base on this because you should easily be able to outperform an 8% yield here, folks. But if we calculate that out, we can see over the 12 years that I would have been investing, I would end up with about $286,000. Now that's not really enough to retire on here, folks, because I'm trying to live off cash flow. And presuming that these investments really only cash flow maybe 4 or 5%, that means on roughly $300,000, I'm only going to be making about $15,000 a year in income. And if you divided that out into a monthly income, it'd be about $1,200. You know, $1,200 a month to do nothing. I mean, that sounds pretty attractive to make it while you're sleeping. Yeah, that's beautiful, but that's not retirement money, folks. I need to make sure there's at least a roof over my head and food on the table at all times. So what I need to do is reformulate this to figure out what I have to do to work backwards so I can make sure as I go forward, I'm going to end up at that goal. Now, my current rate of return, because the S&P 500 will not give me my retirement goals, I've had to venture off into finding higher rate of return investments. So I've been looking into everything from websites. We're just going to touch base on the stock market because it's an easier example for this compound calculator. Now, my average rate of return, including dividends, at about 4.5% to 5%. Along with those capital gains, I'm averaging about 15 to 20% a year. But we're going to keep this conservative, and we're going to say 15% a year. And yes, this is actually possible, folks. It is what I have done. And we can see that, well, I'm going to end up with about $466,000 by the time that I'll be about 35, or about $500,000 there, folks. Now, if we take that 5% dividend over $500,000, now we're talking about $25,000 in annual income. Now we're talking about bills getting paid and making sure you can still eat if you lose your job. And this is something that everybody can actually do here, folks. Now, I'm not going to be able to put you on the right path. You need to just start thinking about this for yourself and figure out what direction is going to work the best for you here. And I don't want you to make the big common mistake that I watch so many people make, is to think that they just need to invest in the stock market. You can also invest in your education if it's going to give you a higher rate of return that could compound faster over a certain length of time. But most people don't realize that if you can understand how assets and liabilities work, well, you can go apply those fundamentals to real things in your own life. And let me give you an example. I am starting businesses with websites. Website income, the way we set them up, are extremely passive. And these websites, if I set them up in what they call brick businesses, transferable, sellable businesses, which I call digital assets, I mean, there is real value behind that will grow over time if cash flows grow, in which I can sell for capital gains. That is an actual asset. And because I understand how the stock market works, because I understand assets versus liabilities, I can apply it to my website business. I could even apply it to my magic business because I am a full-time magician, which, by the way, completely unemployed right now. And if it wasn't for me understanding what I'm talking about in this video, I wouldn't have any income at all, let alone the fact that this year I have made more money off my investments than I actually have been making off my full-time career any time in the past. So I hope you guys saw some value in this, and I hope you learned something. If you have any questions, let me know in that comment section below. I do have a private chat group at the passiveincomeeducator.com. I highly suggest you guys join it because you get privately invited to our WhatsApp group where we talk 24/7, literally morning, noon, and night. We got people in Kuwait, we got investors in the US, Canada, all over the world, Europe, that love talking about all these different investment styles, the stocks they're buying and selling. And I think it would really help you out as I'm starting to really see big value in having a real big group of investors. But stay cool, stay awesome, and I look forward to catching you tomorrow.